Hey guys, what's up? How's it going? Robin here. Welcome to today's video. And in today's video, I'm going to show you guys how I make $447 annually with my dividend stocks. So if you guys are brand new to this channel, my name is Robin and I am a Canadian-based dividend investor. And I built a Canadian-based dividend portfolio at the start of this year. And I've basically been building that portfolio out as time goes on. And I'm trying to grow it to be as big as it possibly can be. And I've been tracking everything along the way. And I've been doing a dividend investing case study where once a week I do an update and I show you guys like all the stocks I'm buying. I show you guys the updates on everything and whatnot. And I kind of like show you guys along the way as I'm doing it. So if you guys want to check that out, definitely take a look at the link in the description of the video. I'll leave a link there. But in today's video, I'm going to focus on how much money we're currently making with the portfolio. And I'm going to show you guys a cool tool that I've been using lately to track things. So if you guys are finding some value from these videos, please give the video a big thumbs up and consider subscribing to the channel if you guys want to see more Canadian-based stock market and dividend investing videos. So let's jump into the portfolio and let's see what stocks I have. And I'm going to show you guys a cool tool that I use to calculate my annual dividend income. Alright, so first of all guys, I just want to say really quickly, I want to give a big thanks to anybody who watches these videos. All you guys have been supporting me over the past while. I've been getting lots of views on the channel, lots of new subscribers, and lots of comments and stuff and whatnot. And thank you very much guys for all of that. I really appreciate it. Another thing I want to mention about comments is I've been super busy guys, so I do apologize for the fact that I haven't been responding to many comments. I'm a little bit more active when it comes to comments, but lately I've just been super busy. And you know how life is. Sometimes you just kind of get caught up in everything and whatnot, and I'm just barely getting by making these videos right now. So I promise for the next couple days I'll try and catch up on some older comments, but just thanks guys for leaving the comments. I really appreciate it, and I'll get to them eventually. I've just been super busy lately, and there's also been a lot more comments on the channel, a lot more new people, so thank you guys for supporting the channel. I very much appreciate it, and I promise I'll get caught up at some point over the next couple days. So here's the portfolio tool that I've been talking about, and this is called trackyourdividends.com, and it's a cool little tool where you guys can see information, like you can punch in your stats kind of thing, and you can see different things about your portfolio. Now, I'm not super familiar with some tools that other people use, so if you guys have any recommendations for some good programs, feel free to let me know in the comments, and I'll definitely check them out, because I don't know if this is like a really good one or not. I just stumbled upon it a couple days ago, and I'm going to try and like use it for my portfolio, because I thought it was pretty cool. But if you guys can think of any ones, even if they're paid ones, just let me know. Like if I don't mind like paying for something if it's a relatively cheap price, if it's going to give me some cool information. So anyways, here's trackyourdividends.com. I'll put a link in the description of the video. Hopefully I remember to do that, and it will take you to this tool, and it's free to use. You don't have to pay anything to sign up, and it just gives you some cool information about your portfolio. So here's my portfolio right now, $7,507. Now I do have some money sitting in the portfolio, and we're going to be buying some stocks at the end of this video, but that's how much money I have in the portfolio right now. It shows you your dividend yield for all your stocks punched in together. So all my stocks punched in together give me a 5.95% dividend yield, which is about 6%. And then it gives us this cool yield on cost thing, which shows us how much money, how do I explain this? It basically shows us how much money our dividend stocks are earning us from the stocks that we previously bought in the past, right? So if you bought a stock like 4 months ago, it's going to have a different yield than a stock would nowadays, right? Because the stock price changes. So this kind of takes everything and kind of averages it out, I guess, and gives you a total. And we have a slightly better yield on cost than our dividend yield. And over time, generally speaking, as you invest in more dividend stocks and your stocks prices rise, this yield on cost will increase, right? It's not a super important metric, but it is important because it kind of lets you see in the past how your stocks have done and how you're currently doing. And generally speaking, you do want a higher yield on cost, because that shows you that the money you put in the past is growing at a faster rate. It doesn't mean that a yield on cost of 6% is going to give you more money than a stock that has a 6% yield or a 5% yield. It just lets you know like how well you're doing when it comes to your stocks in the past. And I'll probably do a video about this maybe later on, but just kind of keep in mind that yield on cost is an important factor, but it's not like the most important factor. It's just something to kind of look at, right? And next up we have is our annual income, and this is sitting at $447. So we make $447 with our dividend portfolio, and I have been tracking the monthly dividends in my dividend investing case study. If you guys watch the channel, you probably know that we're sitting around $20 a month. So this number might not be 100% accurate, because this tool is a little bit delayed. I've noticed it's not 100% updated, but it does give you a rough estimate, and I think it's pretty accurate for the most part, assuming I punched everything in correctly. So just kind of understand that. Hopefully I punched everything out. When I first started this, I didn't realize that it was in US prices, so I had to switch it and I had to redo everything. So hopefully I punched in the numbers correctly. But you guys can see, you can put the ticker in here, and it's super easy to do that. All you have to do is click new holding. You put in the ticker price, you put in the number of shares, and then you put the average cost for a stock. So if I go into my Wealthsimple trade account, you'll see here we have like ZRE, for example. I bought in ZRE. We put in 15 shares into the number of shares, and then it shows the average price of which I paid for the stock here. You would put that in here, and that would give you like your yield on cost and all that kind of stuff. So like I said, I will go over my portfolio towards the end of the video, but I just wanted to kind of give you guys, that's basically how you do it. So you can see here's the stocks I have here, so Bank of Nova Scotia, for example, shows we have 3 shares, shows the price, shows the average cost that we paid for it, shows our profit / loss, shows our dividend yield, which is really cool, and then shows our yield on cost, and then our annual income. So it's not tons of extra information, but it is cool to see, like in a nutshell. It's easier to look at this and see which stocks are performing better than in my Wealthsimple trade account. And it's nice to see the yield on cost difference. And as you guys can see, generally speaking, when you make more money from a stock and it increases, your yield on cost is going to increase as well. So you can see all the stocks that I'm kind of in the green here, generally speaking, have a higher yield on cost because they're growing, right? And over time, as like a company increases their dividends, you're going to get a higher yield on cost as well. You can see like BPY, for example, I have a little bit more of growth from this stock. It's got a higher yield of cost of almost 9%. And it doesn't seem like much, but remember guys, this is like from earlier in this year I bought this stock. So a lot of stocks we bought back in March that are doing pretty good now, you can see that the yield on cost is slightly growing. And this is because the stocks, we bought them when they were super low, they had high yield dividends, and now they're, even HR, HR cut their dividend at the start of this year. We bought into it, during the pandemic and whatnot. We have 6.72% is the yield right now. From the shares that we bought, we have a 7% yield. So you can kind of see the value in that. And even just buying good dividend stocks earlier this year, that's why everybody was going crazy, right? Because you could buy them at such a low price and they have high yields. And then assuming the company doesn't cut their dividend, you're going to have a nice yield on cost that's going to grow over time. Even with Manulife here, MFC, you can see here the current yield is 5.61%. We have a 6.11%. That's almost a full 1%. So it does add up over time and whatnot, and I think this year is a great opportunity to do that. I'm just gonna scroll here quickly to take a peek at some of the ones you guys can look at. We have had some good ones, some not so good ones, and you can see here that some of the ones, like the negative ones here, really pull down the portfolio in terms of like the earnings, I guess. As you guys can see, if a stock's in the negative, it's gonna have a lower yield on cost because now the higher price that you paid, now you're paying a higher price, and it's just going to put down that yield of cost because the current yield is actually higher now, right? So in the past you bought it for a lower yield with a higher price, and now it's cheaper with a higher yield, right? So, and you can see like my biggest one that probably took the biggest hit is really dragging the portfolio down overall is definitely XRE. I bought tons of shares of XRE before the crash, and then when the crash happened, XRE just kind of basically tanked down with it, and they quite haven't recovered yet. But you know what? There is an argument for maybe investing into XRE right now, since it is still at a pretty low price, and I am going to be buying a little bit of XRE later on in this video. There's 2 stocks to be buying in this video. The first one's going to be Manulife, and the second one's going to be XRE, and I'm going to dive into my portfolio and talk about why. But you can see even XRE, our yield on cost is 5.7 and the actual current yield is 6.18%. So if you think XRE is going to go do good in the future and real estate's going to recover, Canadian real estate, it'd be a good stock to buy. And I'm going to start buying it because it's still pretty low, and over time as it grows, I want to benefit from that, right? So I just want to show you guys this really cool tool. You guys can check it out. You can play around with it if you want. And once again, if you guys know any ones yourself, please let me know in the comments of this video. So anyways, let's go into the portfolio here, and let's take a peek at our stocks. I'm going to go into my my dividend stock portfolio, and we'll start with that one, and I'll show you guys a stock that I'm going to be buying for this week. Alright, so the current portfolio stats is $4,000, $513 Canadian, and we are up about 3.41% over the past month. It looks like over the past day or so, Canadian stocks have had a nice little rise. They're down a little bit today, but I guess yesterday they must have rose up to some degree, because it says they're down 0.06% today, but over the past week, we are up 1.66%. So a little rise over the past week with our stocks. And over the past month, we are up 3.41%, which is $148. And over the past 3 months, we are up 4.71%. Keep in mind, this isn't a 100% Canadian-based portfolio. My dividend stocks are kind of split between, I'd say it's like 60-40 in favor of Canadian stocks. So 60% Canadian and about 40% US stocks right now. But I do eventually want to kind of bring it to be even to some degree. And just basically the growth of the portfolio. And overall, we are up about 2.34%, which is $100. Keep in mind, we did invest a lot of this portfolio during the crash, which happened right here. So we're still kind of recovering, and all the money we invested during the crash is starting to we're starting to benefit from that slowly, right? Stocks are slowly starting to catch up. It's unfortunate we didn't invest into more US stocks, but I think that's okay because I think other stocks are going to start to climb as time goes on and whatnot. So we have $116 to trade today. I'm going to be buying Manulife today, and we're going to dive and take a peek at Manulife here. I still think Manulife is a really great stock. If we go over the past year or so, we can see that they went quite a bit down. We bought a bunch of shares. I can't remember when it was. It was somewhere around here in like March or April or June or something like that. And we bought 4 shares, and we're currently sitting at an 8.6% yield. Growth since then, which is only $6. I wish we would have bought more shares. I should have bought more shares. The yield is currently, I don't think this is correct. I think it was about 5% or something like that, or 6%. So it's a pretty good yield stock right now. I have faith in Manulife. I think they're going to do really well. And if they're already doing okay right now, I think going into the future, they're going to I think they're going to be one of the better stocks that are going to come out on top. So I'm definitely going to be buying Manulife. I should have bought some more in the past, but I'm just going to buy a couple shares today. Currently priced at about $19 Canadian. So I think I can get about 4 shares. We'll see how much 4 shares adds up to be. Then after we buy Manulife, we're going to go over to the REIT portfolio, and I'm going to buy some XRE just to kind of benefit from that. And it looks like we might actually be able to buy 5 shares. So let's see how much 5 shares adds up to be. $100, we could buy 5 shares. We'll have a little bit left over. We'll see if we have anything left over to buy some other stocks in our dividend-based portfolio. And we'll wait for that trade to go through. And then we'll see what we have left over. And keep in mind, guys, once again, I do a weekly update on this portfolio while I dive a little bit deeper and I show you guys all my earnings and whatnot. And that's the dividend investing case study. And once a month, I do like a big portfolio dive. So over the next couple days, I'll be doing a big portfolio dive. And I'm also going to do a YouTube income report. I know I didn't do one last month, but I'm just going to wait to the end of next month. And I'm just going to do like a giant video together. And we'll do that for all you guys who are wondering how much money I make with my YouTube channel and stuff like that. Sorry I missed the last update, but there's just been so much going on that I'm just going to wait till next month and we'll just do like a 2-month update kind of thing. So that trade went through. We have $17 left. And with the $17 left, I think I'm going to buy, I wanted to buy ZWC. I think I'm going to keep investing with ZWC because it's doing really good. Or we could pick Savaria Corp. Savaria Corp has been doing, I can't even say it. Savaria Corp is doing really well. We're sitting at a 14% gain. Once again, this is one of those stocks I should have bought more of. So we're going to buy 1 share of that since I think we can currently buy 1 share of that. And then I don't think we have anything left over. We have $2 left over, so I don't think we're going to buy anything else with our Wealth Simple trade account. So we'll just wait for that trade to go through. And then we'll hop over to our REIT stock. We'll take a peek at our Canadian REITs, and then we'll see how they're doing. And we'll just wait for this trade to kind of go through. Done with that, and let's jump over to the REIT stock. We'll go to the personal account, and we'll see that we're doing okay with the REITs over the past week. We are down about 0.55%. Over the past month, we're about 2.6%. And over the past 3 months, we are up 2.67, which is $87. And then all time, we are at 1.44%. So our REITs are slowly kind of starting to recover for the most part. Keep in mind that I did kind of go a little bit aggressive with the REITs. Like I bought some really, really cheap companies that I guess you could consider to be a little bit more higher risk. But it has kind of paid off. So I'm not too upset about that. But we'll have to wait and see because there's still a lot of time left to see what's going to happen with real estate. So we have $103 to buy with our REIT stocks. And like I said, I'm going to buy some XRE. Now, XRE is $14. And you guys can see here, like we're only down 4% in our REIT portfolio. So I think still buying XRE right now is a good buy, especially with a yield of 6%. Over the past year, we can see that they still haven't recovered very much. I still think they have a lot more room to go. And if Canadian real estate is going to bounce back up over the next couple of years, I think I'd imagine XRE is going to be one of the more better, and more consistent REITs in the past and whatnot. So I think they're going to do well. It's, going to do good as well. So we're going to buy a couple shares of that. I'm going to buy about maybe 2 or 3 shares of XRE, and then we'll see what we have left over, and I might put it into Brookfield or something like that, since that's another REIT that has just been doing really well for me. I'm a big fan of them. So we'll wait for that order to go through, and then we'll take a peek at Brookfield and we'll see how that's doing. And keep in mind, guys, if you guys have any questions about anything, like I said, I'm sorry I haven't been responding to them lately, but just leave any comments you have in the video, leave any questions you have in the comment section, and I'll try to get back to them the best I can. And this is Brookfield Property Partners. I have 18 shares with them, and we are up 5.53%, and they have a crazy yield. That it's not actually 14%. I'm just gonna look it up here really quick. Let's just go to BPY stock, and their current dividend yield, it is about 11%. Holy crap, that is a super high dividend yield. You know, this is like one of the riskier investments, I definitely will say, but right now I think we're definitely going to buy it. It's definitely high risk, but I have faith in Brookfield. Looks like they're doing pretty well, and you know, we've already done pretty well with a 5.57% gain with a nice dividend yield. So I think we're going to add just a couple shares today. We don't own a lot of shares. It's only $300, so it's a high risk play, but in the end, if it pays off, I think it'll do well. So we'll buy a couple shares. It is priced at $15, so we might buy like, let's see what 3 shares adds up to be. $47. So we'll buy 3 shares of Brookfield, and that should leave us with maybe a little bit left over, and then we'll see if we have anything to buy any other REITs. And keep in mind, guys, we haven't had any new dividends come in for the past couple days, so I'm not going to really give you guys an update on dividends. $11, so we might be able to buy a share of HR REIT. We'll see if it's enough. HR REIT has actually done pretty good for me too as well, and it was one of those riskier ones. We'll buy 1 share of HR REIT and confirm the order, and that'll go through. So those are the stocks I'm buying for this week, guys. Keep in mind, when I do my dividend investing update, I'll show you guys all the previous buys I bought for this week. But I just want to share that with you guys and show you guys like the earnings potential of the portfolio. And I know, like, when I first started this, I know some of you guys are kind of like, well, it's only $447 a year. That's not that much money. But when I first started this portfolio, we were just getting like a couple bucks, and we weren't making, you know, it's all about the passive income and the fact that this money is going to grow over time, and we're just going to keep reinvesting it. So that's the whole point of this video. So anyways, guys, if you guys enjoyed this video, let me know what you guys think in the comment section. Please give the video a big thumbs up, and be sure to subscribe to the channel if you guys want to see more of these videos. Follow alongside with me as I do, you know, my investing journey and whatnot. And if you guys want to sign up for Wolf Simple Trade, I will put the affiliate link in the description of this video. That link right now will give you $10 if you deposit $100 and you trade $100 worth of stocks. You'll get $10 for free, and I'll get $10 for free. So if you guys want to support the channel, you can definitely do that. So thank you for everybody who's done that, and I appreciate that very much. So see you guys later. Have yourself a good day, and take care.